Welcome to this episode of Top 10 Takeaways. This channel explores the top 10 takeaways you can discover from a variety of sources such as interesting and popular books, people, videos, podcasts, and companies, just to name a few. In this episode, we look at the top 10 takeaways from the teachings of Robert Kiyosaki. If you're not familiar with Robert Kiyosaki, he is the creator of the Cashflow board game and author of the book Rich Dad, Poor Dad, along with several other best-selling books. He and his wife Kim are the founders of the Rich Dad Company. Kiyosaki's writings, podcasts, and YouTube channel have influenced millions of people in the world of financial literacy and investing. Now, let's take a look at those top 10 takeaways you can learn from the contrarian financial teaching of Robert Kiyosaki and the Rich Dad Company.
Takeaway number 10. Savers are losers. If you listen, watch, and read enough of Robert Kiyosaki, you probably recognize this famous quote that savers are losers. Now, Kiyosaki isn't trying to be mean and make disparaging remarks about people who save money. He is simply making a statement of fact. If you are saving money in the form of dollars, then you are losing the value of your money. In today's economy, savers truly are losers. The majority of your popular financial teaching in the world today stresses the importance of saving dollars. Here's the problem though. The value of the US dollar is going down every day. In May 2021, it is estimated that monetary inflation currently stands at 4.2%. If you have dollars saved in a high-interest bank savings account paying out a maximum of 1% APR, then you are still losing lots of ground due to the inflation rate. Due to US dollar inflation, Robert and his wife Kim prefer to convert dollars into the precious metals gold and silver as well as two cryptocurrencies, Bitcoin and Ethereum. They say that they buy and hold these assets and never sell. This is how they save financial value. Because of these dollar inflationary concerns as well as other bad monetary policies, Kiyosaki also utilizes debt as a wealth strategy.
Takeaway number 9. I love debt. Another short pithy phrase you will hear Kiyosaki often tell his audience is "I love debt." He understands that this viewpoint is again completely contrarian, or opposite the standard financial advice and teachings of popular financial media personalities, such as Dave Ramsey and Susie Orman. The point that Kiyosaki is trying to make here is that there are distinctions between bad debt and better debt. Bad debt will normally be high-interest revolving debt such as credit card debt, and debt against depreciating assets, such as auto loans. Kiyosaki loves debt that is used to buy normally appreciating assets that produce regular cash flow, such as real estate. He and his wife Kim have learned how to leverage lots of debt to buy large apartment complexes that generate cash flow. The money that comes in the form of rent payments, is greater than the money flowing out in mortgage payments, repairs, and other expenses. Robert and Kim Kiyosaki feel comfortable pursuing this debt strategy due to the unsound monetary policies of the Federal Reserve System and the United States government. With policies that have taken the US dollar off the gold standard and allowed uncontrolled dollar creation, the value of the dollar will continue to decline. The dollar has truly become a fiat currency backed only by the faith and trust of the US government. The dollar has essentially become an IOU from the federal government, a debt instrument. While other financial gurus treat the US dollar as a currency with value that can and should be saved, Kiyosaki is less trustful of a government that continues to debase its currency. When you look at world history, governments that debase their currencies tend to self-destruct over time.
Takeaway number 8. 4 green houses. 1 red hotel. According to Kiyosaki, one of the best ways to learn how to handle money and become wealthy is through game simulation. As a young teenager, Robert's rich dad had him play the game Monopoly. This is where he learned the game strategy 4 green houses. 1 red hotel. In order to excel at the game and win. This is a simulation of using the power of cash flow through the purchase of real estate. And then later, as an adult, Kiyosaki developed his own board game called Cashflow that built upon the money principles of Monopoly, and expanded the game to help teach both kids and adults some higher-level money principles including financial statements and balance sheets. The main idea here is that money is a game. Be sure to play it wisely. Educate yourself. In the description area below this video, we have included links to purchase these games as well as other resources that can help you on your financial journey. You can also go to richdad.com to find out how you can play a free online version of the Cashflow game. We highly recommend checking that out. And if you are getting value from the information in this video, would you consider giving this video a like and subscribing to our channel? This will help us to be able to reach more viewers and expand as a channel. Thanks. Our next takeaway is related to real estate investing and the concept of leveraging debt.
Takeaway number 7. I love real estate. Another Robert Kiyosaki quick quote that he says on a very regular basis is, "I love real estate." Real estate is a great vehicle to earn and preserve wealth. If you look at the financial statements of the wealthy, most would show that real estate plays a big part of their wealth. There are lots of reasons to love real estate. First, you can utilize OPM or other people's money to help you buy real estate. This could include using bank financing or other investors to help buy deals. Second, real estate normally appreciates in value over time. This helps in the battle against inflation and the devaluing of the dollar. Third, rental real estate purchased well, when the amount of rents coming into the owner is greater than the outflow of mortgages, taxes, insurance, and repairs, this offers cash flow to investors. Fourth, real estate offers a number of different tax incentives that make it attractive for investors to invest in. And speaking of tax incentives, this leads us to our next takeaway from the teachings of Robert Kiyosaki.
Takeaway number 6. Understand tax law and tax strategies. This is an area in which the average taxpayer is confused and misinformed. Many believe that wealthy people are tax cheats and not paying their fair share. While there could be a few who are tax cheats, in general though, the wealthy understand that money is a game, and they understand how to play that game very well through understanding the tax codes of their local, state, and federal governments. The US government creates a number of different incentives in the IRS tax code for citizens to do things the government needs done. For example, government officials understand that there needs to be a certain level of population growth per year in order to sustain the general workforce and annual tax income coming into the government. So, in order to keep a healthy population growth each year, parents receive a large deduction for raising a family. Many single individuals and even married couples with no kids probably view this child tax incentive as unfair, but a growing national population helps everyone in the long run. In the area of real estate, the government has placed in the tax code many incentives for middle-class and wealthy individuals to help the government through providing housing for people. The government really doesn't want to be involved in building housing and being landlords because they aren't very good at it. Just take a look at all the horrible conditions of inner-city housing projects, epic failures. Most financially astute people understand that one of the biggest expenses we all pay is taxes. And, depending on what state you live in, it is estimated that your overall tax burden could be as high as 40 to 50% or more of your total income. So, the financially educated engage with these IRS tax code incentives in order to save money and build wealth. This is a big reason why the rich get richer. Like him, or hate him, as former President Trump told Hillary Clinton on the debate stage in 2016 about not paying taxes, "That makes me smart." It's all about financial education and financial intelligence.
Takeaway number 5. Understand the definitions of assets and liabilities. According to Kiyosaki, many people are confused on the true definitions of assets and liabilities. He maintains that many so-called financial experts and advisors have mislabeled some property as being assets, when in reality they are liabilities. Here is how Robert defines these terms. An asset is anything that puts money in your pocket. A liability is anything that takes money out of your pocket. So, according to Kiyosaki, assets would include property such as cash-flowing rental real estate, businesses, or dividends from stocks and bonds. Liabilities would include personal property such as cars, boats, campers, etc. These items include regular maintenance and upkeep if used simply for personal reasons. But there are ways you could potentially turn these liabilities into assets if you figure out ways to cash flow them. For example, you could rent out these items to others when you're not using them. This is how wealthy people think and behave. Liabilities could even include your personal residence, because your house usually takes money out of your pocket in terms of paying your mortgage, taxes, insurance, and maintenance costs. Again, your home could be converted into an asset if you are able to figure out ways to generate cash flow through such ways as short-term rental, house hacking, and making a profit when you go to sell your home. Cash flow is one of the key differences between assets and liabilities.
Takeaway number 4. Understand the power of cash flow. Robert Kiyosaki has written an entire book called The Cashflow Quadrant, which we highly recommend on this subject. See links for this book and more resources in the video description below. Money is an idea, and the cash flow quadrant is about being, not doing. It's a mindset shift. This mindset shift includes the financial concepts of paying yourself first as well as infinite returns, where your money and assets keep making you more and more money, indefinitely. Robert often says, the poor and middle class work for money. The rich have money work for them. Wealthy people understand the power of cash flow. Here's a diagram of a statement of cash flow and how the average poor and middle class person interacts with it. First, they receive income from their job, and then immediately send that money out through expenses and purchasing liabilities. The average middle class person, for example, overspends on a big, fancy house, and then they have a lot of their income go out in the form of expenses like mortgage payments, property taxes, insurance, maintenance, and utilities. The poor and middle class may also have debt in the form of car loans, consumer loans, and credit card payments to stay on top of. They tend to overspend on transportation, food, and clothing. This leaves the average person very little margin in their finances to build wealth. Now, check out this diagram of a statement of cash flow of the wealthy. Here we see that the wealthy have income coming in from sources in addition to a job as a result of wise investments. These income sources could include rental income, dividends, interest, and royalties. Then, the wealthy mindset uses this income coming from cash flowing assets to turn around and buy even more cash flowing assets like real estate, stocks, bonds, notes, and intellectual property. Of course, the wealthy still have expenses and liabilities, but, in general, they tend to keep these as low as possible and focus time, energy, and more money into creating infinite returns with the purchase of more and more cash flowing assets. Shift your mindset in the cash flow quadrant and change your life. If you are getting value from the information in this video, would you consider giving this video a like and subscribing to our channel? This will help us to be able to reach more viewers and expand as a channel. Thanks.
Takeaway number 3. Be the bank, not the banker. The rich create money with money. They think like banks. Again, a concept like this is totally related to a shift in financial mindset. So how do banks make money? Well, they take in other people's money through checking and savings accounts, and hardly pay their customers anything to do so in the form of very small interest payments. Then, using the power of leverage, they take other people's money and loan it back out to their customers with much higher interest rate payments in the form of home mortgages, consumer loans, and credit card lines of credit. This is true financial intelligence. Using other people's money to make more money with money. Don't diss the wealthy for using financial intelligence to make more money with money. Copy them. This leads perfectly into our next takeaway from Kiyosaki.
Takeaway number 2. The importance of financial literacy. As we have already been talking about with most of our other takeaways, you must be a student of the wealthy and how to create more money. The majority of people are deceived on how wealthy people become wealthy. They have beliefs ranging from wealthy people cheat people out of money, or they are just lucky, or they inherited a bunch of money from their family. The reality though is that the majority of the wealthy have educated themselves about money. They understand that money is not an event. It is a process. The wealthy have educated themselves on how money works, and they are working through a step-by-step process to create more value in the workplace, make more money with money, investing in cash-flowing rental real estate, and building successful businesses. Teaching financial literacy is the reason Robert and Kim Kiyosaki started the Rich Dad Company. This is why Robert created the Cashflow board game and wrote the best-selling book Rich Dad Poor Dad, to teach the fundamentals of financial literacy such as how to read and understand financial statements and balance sheets. If you desire to live a better financial life, if you want to escape the rat race, then you must embrace financial literacy. Period.
Takeaway number 1. Be a contrarian. This may be a completely cynical way to look at the world, but the majority of people, organizations, and governments have an agenda. And there are specific viewpoints that are often pushed on the masses by the media, educational system, tech companies, and government. Propaganda may be too strong of a word, but unfortunately, it's probably very close to this practice. And in the area of money, there is a financial viewpoint that has been impressed upon the American psyche that says, get a good job, invest in stocks in a 401k, save money in the bank, avoid debt, and play it safe. Robert Kiyosaki teaches people to question everything you have been told. There is another, possibly better viewpoint if you will just stop and think about it. He often says this quote, there are 3 sides to every coin. Heads, tails, and the edge. Many people simply pick a side like heads or tails and can't comprehend another viewpoint because their mindset is stuck on one side of the coin, so to speak. Kiyosaki encourages people to look at all areas of life from the edge, where you can see all 3 sides simultaneously. This will help you make better, more informed decisions. Get your information from all sides and a variety of sources. Don't always believe the main narrative that is being pushed on you, especially when it comes to finances. You can live an average financial life like the majority of people by believing the primary financial narrative, or you can be a contrarian thinker and question everything about money and looking at finances from all 3 sides. Be a contrarian and live a better life.
If you enjoyed this video, would you consider giving this video a like and subscribing to our channel? This will help us to be able to reach more viewers and expand the channel. Learn more about Robert Kiyosaki and the Rich Dad Company, as well as some of the resources discussed in this video in the description below. Thanks for watching.